shares of Berkshire Hathaway rising pre-market after the Saturday release of Warren Buffett's annual letter to Berkshire Hathaway shareholders. The company reported record profits in 2023, as well as cash holdings that hit a record for the fourth quarter. It is the company's first report since the passing of its vice chair, Charlie Munger. For more on this, we turn to Greggory Warren, who is the Morningstar strategist and senior stock analyst. Thanks so much for taking the time here this morning, Greggory. I mean, let's talk about some of the records that we saw come in for Berkshire Hathaway, the record cash balance, the profit here. What is most significant as this company really repositions some of its largest investments and really looks across where there are moats, regardless of the economic environment?
Well, I think Berkshire's been in sort of a conundrum for quite some time now. Buffett gets credit. Buffett and Munger both, when he was still with the firm, got credit over the years for being very, very disciplined, especially when it looks to acquisitions. So they weren't out there chasing a lot of deals just to put money to work. And the byproduct of that is they've had a lot of cash build up on the balance sheet. If we look back at the past 5 years, they were generating around $25.5 billion a year in free cash flow, and that's their cash flow from operations less the capital expenditures. So beyond sort of the regular money they were putting to work on capex, they were still churning out a ton of cash, and it's really hard to sort of dispense of all that capital every year. And for a while there, they were able to sort of offset some of that with share repurchases, but the past couple of years, it's been harder and harder because the valuation on the firm has gotten higher and higher. So it's been a difficult situation, for Berkshire to be in. We were kind of concerned, a few years back, Buffett had made the comment that he couldn't sit here with $150 billion in cash and pretend to shareholders that it was something brilliant. But back when he said it in 2017, short-term rates were at zero. Now they're at 5% plus. So we've been a little bit less concerned about that cash balance creeping up past $150 billion than we thought we would be. But that's because they're earning a lot on that right now. So from that perspective, it's an interesting period for Berkshire right now, and it has been for a number of years because they've just not been able to find good enough deals to put the money to work in, which sort of begs the question, is a dividend at some point coming? Should share repurchases be ramped up? I know Buffett's answer to that, but I think that's something that the next guys who run the firm are really going to have to address when they take over.
And what's your expectation there, Greggory?
I think longer term. I know Buffett's been really against the dividend overall because his thought is we could do better with this cash than most investors, and once you start a commitment to that dividend, you have to sort of stick to it. And I understand both of his arguments, but I think he's also really sort of leaving that as a tool for the next management team because he doesn't want to sort of commit them to something that they may not be able to sort of maintain over a long time frame. But it also gives those guys sort of that ability. Greg Abel's at this point, the heir apparent, to be able to sort of step in and go to shareholders and say, look, I'm not Warren, I'm not Charlie. We have a ton of capital on the books right now. We want to start giving it back to shareholders in incremental amounts. This is how we're going to start doing it. Give us time to show you that we can still run this business the way it has. Because I think that was one of the more interesting things that came out of the annual letter. And it was something we've been saying about Berkshire for a long time. Buffett sort of referred to Charlie as the architect of the firm, and him the general contractor. And in a lot of ways, Berkshire has been sort of set up as this decentralized organization that kind of runs itself. So even if Warren and Charlie are no longer there at the helm, the business should continue to run as it has historically. Where Warren and Charlie's sort of benefits came into play was on the capital allocation front. And I think what's going to happen is once Warren's gone, it's going to be harder for management to say, we're going to hold on to all this cash.
Right.
In anticipation we can do a big deal down the road or whatever else. I just think it's going to be harder and harder.
And just with regard to that next big deal down the road, where is that next purchase opportunity? I mean, they've gone heavy into Japanese trading firms. They've gone heavy into Occidental Petroleum. We've seen how that's played out. They do have some AI bets within their portfolio. If you want to look at Apple, Amazon, Snowflake, where is that next big purchase opportunity?
It's gotten harder and harder. I mean, I think I think we'll probably see more on the stock investment front than we will outright acquisitions. I mean, I think he even sort of noted that in the letter this year that so many of the businesses that they could buy that would be meaningful, because Berkshire is such a big organization at this point, have already been picked through. And it's really sort of hard to find that next big deal that can be meaningful. I mean, Allegheny was a stroke of genius, with them picking that up, because it melded perfectly with their existing organizations and provided a big boost last year to the insurance operations. But finding more deals like that, I think, are just going to be tougher for them to sort of pull off. And he did make the point that, outside of the U.S., there aren't a whole lot of things out there that they could really sort of step into. They've made a commitment to the Japanese firms not to buy more than 10% of their companies, and that's sort of in tandem with deals and opportunities for them to sort of do partnerships longer term. But I think it's just been harder and harder for them to find things that are of value that would really sort of move the needle, and I think that's going to be the complicated thing for them going forward. I mean, I think that the negative risk for anybody in this position is they go out and do a big deal just to do a big deal. But I don't see Buffett doing that. I mean, he's very, very disciplined.
Extremely disciplined, and it has certainly paid off, to say the least, over the years. Well, Morningstar's Greggory, Warren, always great to have you. Thanks so much for your insight.
Thanks for having me.